All right, welcome to Growing Wealth. Hang on tight, the stream will be starting shortly. So, the S&P 500 has been brutal last week. This huge correction over here. I hope you have been doing okay. For those of you who have made some profits during this period, good for you. And as for those of you who have suffered some losses, well, take the time to think and reflect what you have done right and what you have done wrong, and what are the things that you could have done better if such a if the same scenario is to happen again next in the future. So the next time such a huge correction appear, how are you going to be better prepared to weather yourself through the market and protect your portfolio during this period of time? Now, if you ask me, did I anticipate this huge correction straight from the first day that it started, which is the Monday of the week that's on the 24th of February? Well, my answer is no. I did not anticipate this. I did not anticipate that the S&P 500 would suddenly over the weekend just broke through the 50-day moving average, which is the blue line that you see over here, over one weekend like that. And furthermore, it's not just below this 50-day moving average, it's a huge gap below the 50-day moving average. So, but if you look at my portfolio, my portfolio did not actually decrease. So 24th Feb was Friday. I closed the week with 15.7k in the portfolio. And when the market opened on, sorry, the, the market closed on Friday, my portfolio was at 15.6 thousand. And then when the market opened on 24th February, you see that my portfolio, instead of declining together with the market, it actually profited by $100. So what happened over here if I didn't anticipated the correction, right? Actually, it was AMD that hinted this correction to me and then which protected my portfolio during the first day of the correction itself. Now, I've been in a long diagonal trade with on AMD for quite some time now, and from my experience with the stock, I know that AMD has been quite volatile stock. It moves in huge ups and downs over, like you can see on the daily chart over here. And what about AMD is that ever since the start of February, you can see that it has been on a very strong upwards move like that. So it came back down to test the 40-day exponential moving average, which is the 40 EMA. After bouncing off, it experienced a very strong upwards move, almost parabolic in fact. And if you have known, stock prices, they have to go in wave patterns, in ups and downs. So no single stock price can go up in a straight line forever. So, and especially when you see this huge exponential upwards move like that, it can be very dangerous. Oftentimes prices have a strong tendency to snap back to where the moving averages were, as and this is because moving averages tend to act as a magnet for prices. So if prices went up too far above the moving average or too far below the moving average, there is a strong tendency for the prices to shoot to snap back up and meet at the moving average. And so once I see this huge move upwards, and then I see one red candle over here and another red candle appearing over here, this signals to me that AMD is about to correct. And if AMD were to correct, being a volatile stock, it is going to have suffer a huge decline, at least back to the 40 EMA where it bounced and tested it before. If not the 40 EMA, then worse, it could be further down below the 50 SMA. So what I did to protect myself on on the last Friday, 2 Fridays ago, was that I cut my AMD long diagonal trade and took profit over there. And in addition to that, I add on protective puts on AMD. So I bought put options such that if AMD were to correct down sharply, I would have benefit from the decline in AMD as well. And sure enough, you see that on Monday when the AMD prices open, it straight away gap down to the 50-day moving average. And this is what saved my portfolio, giving me a general in overall $100 increase while the huge market corrected very steeply on Monday. And on Monday, when I see this, also I take a look at the S&P 500 and it gave me a shock. Because while AMD only corrected to the 50-day moving average over here, you see that the S&P 500 did much worse. It gapped down very drastically and it pierces through very steeply. And if you have been watching my live stream last week, you have known that my portfolio is currently carrying what I call the profit castle strategy trade. So it's a calendar spread option strategy that makes use of 3 calendar spread at different price range. So basically, in short, what I have at that point of time was that the trade that I was carrying at that point allowed me to gain a max profit when the price of S&P 500 is at 327, which is the 50-day moving average. So why did I place it there? Because I expect the S&P 500 in the worst case scenario to correct down to the 50 SMA. And in such scenario, I would have gained and hedged my portfolio at the same time. So the max profit back then was about 2,000. And since it gapped down, the 2,000 max profit that my account is about to get is no longer going to be realized anymore. So what did I do? I decided to hedge my portfolio at this point in time. So what I do on this day was to buy a protective put for the S&P 500. So what I'm thinking back then was that two scenarios is going to happen. Now, if the S&P can rally back up, reverse back up to the 50-day moving average by the end of last Friday, which is the 28th of Feb, then I could still get my 2,000 max profit. Now, by buying a protective put, my max profit of 2,000 would be slightly less because the put that I bought would be at a loss. But however, I'm okay with that, as if I've with the puts in place, if the S&P 500 is to if the S&P 500 is to be correcting down further downwards, what is going to happen to my portfolio is that I'm going to lose this max profit, and the trade cost me only about $100 over. So I'm going to be negative $100 over. But however, the profit that I can get from the protective put that I sold here is going to be far more than the $100 that I've lost. So either way, it goes up or it goes down, I'm going to be in the green, right? And that is what I thought, and which is what I acted exactly. So on the Monday when the market opens, I bought a protective put. And sure enough, Monday itself, when Tuesday opened, it opens up over here. And then the entire Tuesday was a red day, and the market just corrected very drastically, broke the 100-day moving average even up to the midpoint over here at about $313. So generally, if we go back to the P&L profit of my portfolio, you see that because my portfolio is still carrying several long trade at the point in time, you see that generally while the market declined, I did not earn much at all. In fact, from 24th Monday to 25th February, my portfolio only gained an average of $100. So which is less than 1%, which is less than like 1.5% in fact. So all right, I got a question over here. Are you entering using leverage trade? So when you deal with options, options are a very highly leveraged instrument. So definitely there's leverage, but however, if you know how to use option, then you can structure your trade in such a way that your max risk, your max loss is protected, and you are risking a fixed amount of percentage of your portfolio. So therefore, a full knowledge of option is going to be very important and critical for you if you want to use options to hedge or trade uh, in your portfolio. Yeah. So so there was Tuesday. Tuesday I did not do anything, and I just watched the market went down steeply from like 324 to like 313, and I did not do anything because my put was in place and it was going to protect my portfolio, and there's nothing for me to do. Now come Wednesday, what is my thought process on this day itself? Now when Monday opened at around at this price level. So I thought the market itself has already corrected so steeply. It already lost like how much? How much did it lose? If we can use the trend line tool to do an estimation. So from the close on Friday, it gap down straight away to Tuesday. Can you see that it has already lost on the info box on the top right hand corner? It already corrected 6.5% over the course of like just 2 days over the weekend, and this is really extreme, right? So what on Wednesday, I was thinking to myself that it has already corrected 7%, and it is in between the 100-day moving average and the 150-day moving average. So I was expecting back then when Monday opened a strong, not a strong, but a brief rally upwards. I was expecting a brief rally upwards before it come back down, before it continue the correction again. So what I did on that day was to close my put that I bought on Monday. I closed this 320 put that I bought on Monday. And then if you go into the minute chart, since I anticipated a brief rally, right? I took opportunity of that trade idea, and I went for an intraday trade instead. So you can see this is the minute chart for Wednesday. This is, can you see anywhere? Yeah, just see over here. This is 26th of February, which is Wednesday. And what happened was this: the market opened. Within the first 5 minutes, I see that the candles are all above all this series of moving averages over here. So it tells me that the support at this level is going to be quite strong. And furthermore, if we go back into the pre-market, we can see that the market has been rallying rather strongly since like 5 p.m. Singapore time. And so this gives me the confidence that a brief rally is about to come. And what I do here is that I entered this time call options. So I closed my protective put that I bought on Monday, and I bought call options instead. I bought a 315, which is around here. I bought a 315 put when the price is somewhere around this area, and then immediately the market shot up just like I expected. It shot up very strongly, and then when did I close my trade? Because I intended this to only be a brief rally, right? So I'm not going to hold this. Not going to hold these options throughout. So what I did was I waited for. I know that you see, and again, exponential move upwards. So what is going to happen? It's going to snap back to the moving averages. But which moving average is it going to bounce off? That is the key question over here. So I entered my trade at this price, and at this price range I was well in the profit already. And well, being a trader, I wanted to ride the wave, right, and maximize my profit wherever the price can bring me to. So I was waiting and hoping for a bounce off the 20 EMA over here, the red dotted line that you see on the chart. And so I was waiting, price come down minute after minute, and then at this candle over here, so I bought here, and at this candle over here, you can see that the red candle broke through the 20-day exponential moving average, and then that's it. I closed the trade over here. Now you might be thinking, why not wait further and let it wait for it to bounce off the 40 EMA, or let it bounce off the 50 EMA? Well, I could have, but I'm also risking the profit that I have already make. So, and then again, this is intended to be a quick intraday trade, because so I do not intend to hold on for much longer. I only want to hold on if I can, if the trend can, if the chart, if the prices can tell me that the brief rally is going to be strong and bounce off and go up further higher. If not, I'm going to cut loss. I mean, cut off my risk here and take whatever profit that I have. But if you have watched my video on technical analysis, you can see that in fact the price bounced off once at the 100 SMA here, and then again it bounced off here. So this is the second time that it bounced. So this is actually a good, this should give you a good confidence to trade upwards again. But because my account is less than 25,000, so I'm limited by the PDT rule, the pattern day trader rule. So meaning that I can only take up to 3-day trades in a period of 5 trading days. And what does a day trade means? It means that you buy and sell any security within the same day. That is considered a day trade, which I've already done here. I bought here and I sold here the same options, which is considered the same security. So 1 day trade is gone. Well, you can say that it has, yeah, and then you see again, it bounced off, it breached the 100 SMA and bounced off here again. But I did not care about that anymore, as I have no more, I do not want to waste any more of my day trades anymore. And with this, I'm right on my brief rally, which helped my portfolio to gain several hundred extra dollars. And as I said, I and I was expecting a brief rally before coming back down, before the S&P 500 is going to correct back down. So after I close my trade, the next thing I was looking out for is that the S&P 500 is in fact reversing back into a downtrend. And with that, you can see it. And I took this as my entry signal for my next stretch of protective puts in the S&P 500. So over here, you see that the prices start to go downwards. It break through all the moving averages one by one and broke through the 200 minute. This is a minute chart, so this is a 200 minute moving average. It broke through, consolidated over here, and I thought that's it. The reversal should have already happened. Although it is still a bit early to tell, because the moving averages, according to our according to our strategy, is such that we want the 50 and 150 to be crossed, 50 to cross below the 150, and both of them are trending downwards, right? But this is the minute chart, so I tend to anticipate things a bit further ahead, and things happen quickly in the minute chart. There tends to be a lot of noises as well. And what I did here is to just buy a protective put and decided to call it a day. It's already like going to 1 a.m. already. So I call it a day here, and let's go back to the daily chart. So on the daily chart, I bought my protective puts at about 314, and it really went down. And the next day, guess what? The S&P corrected even further. So it dropped down all the way to the 200-day moving average over here. And can you see that the 200 SMA is at a very strong support? We can see a uptrending trend line from the start of March 2019, the S&P 500 have bounced once on this trend line, twice here, the third time here, and this time it is coming down to test it the fourth time. And this time, this uptrending trend line coincides with the 200-day SMA. So I thought, okay, this correction should, that's it. This correction is already at the maximum already. So we have two strong supports over here, and then the next strong horizontal support at $302. Which has been acting as a resistance once, resistance twice, and then come to act as a support the third time. So one level, two level, and three level of strong support. I thought that's it. The market is going to undergo a stronger rally over here. And what I do is when the market open, I closed my protective puts again. On the Wednesday, this day, I bought 314 puts and I closed when the market opened here. Now, I did not go for any more intraday trades for the brief rally because I only have 3-day trades and I've used up one, I've left two. So instead of going for an intraday trade, I bought put calls instead. On the Thursday, I bought a 307 call, which is 307, where is it? 307 is somewhere around here. I bought a 307 call and turns out that I'm wrong. If we go into the minute chart, on Thursday, what happened? Was this. So when the market opened, I bought a 305 call and turns out that initially I was wrong. So I bought a 307 call, which is somewhere around here above the 200 minute moving average. Yeah, it's kind of non-intuitive here. Now, as I buy the call in anticipation of a larger rally, the whole S&P 500 corrected more, and then you see this steep downward plunge. And when I see this steep downward plunge, I still held on to my trading thesis, the trading idea that I had in mind, because one strong support here we have identified previously, and you see it supported very nicely, but it broke down in the end. And then the next level of support at 302, we have seen on daily chart, it tested again before this is a forced breakdown, and then go back up, come back down to test it again. So can you see how important it is to know how to draw and identify trend lines by yourself? So this can work wonders in situation like this. And then a forced breakdown, go up and then come back down to test this support again. So can you see how strong, how valid these supports range are that we have identified on the daily chart? Even on the minute, even intraday, they are also acting as a strong support. So I see this breakdown and then come back up, which make me feel that okay, the rally is going to continue. The downtrend, the correction should be over temporarily. And with this, I bought another 305 call. 305 is somewhere around here. So some 305 call at somewhere in this point of time. So after I bought the 305 call, I monitored for a while and I see the market going up, coming down back down to bounce. So I was feeling happy at that moment in time. And then back before I sleep, it was like around 1:30. And guess what? I slept at the worst possible time. The S&P 500 was at the peak, and I thought that's it. My portfolio is going to be super green the next day. But ends up the peak is here, and then the correction continues. So again, instead of a stronger rally, this is just another brief rally, just like on Wednesday. So if we go back to my portfolio, so 26. Oops, sorry for that. 26 was the Wednesday, and this is where I make my mistake. In anticipation of a strong rally, I bought calls for the market and I closed my puts. And then my portfolio suffered greatly from 16.1 to like 15.4. That day I was down like about 5% if I don't recall wrongly. Yeah, it was a very very terrible feeling that for me as well. And I was thinking, what can I do to protect my portfolio? What can I better do? What can I do better, in fact? So Friday, Thursday, and then Friday pre-market was devastating. It closed here, and then pre-market it went down even further to open at this price range over here. So now let's analyze the chart together. Where are the important support this time? I've removed them. So you can see, okay, it might be a little confusing to draw horizontal support, but if you see, the chart has already broke through the 200-day moving averages, the moving 200 SMA. So you might have thought, well, all is lost. That's it. We are going into the what, downtrend, bear market. Well, remember that this is just the daily chart. There is still a time frame above, and that is the weekly chart. So I did not panic yet. I went back up to the weekly chart and look for strong supports that may support the prices of the S&P 500. And this is what I see. The 100-week moving average at this area over here. And can you see it corresponds very nicely to the weekly candle. It corrected to the 100-day moving average and then rallied on Friday. So with that, I marked out this level over here. Oops. 287.69. Now where's the next where's the next closest support? 280, which is this line that you see acted as a support, acted as a resistance, a support, a resistance, and somewhat of a resistance around here. So this is going to be another strong line, 280. Now let's go back to our daily chart again, and I'm going to go through my thought process. Sorry, not minute chart, but the daily chart. Yeah. So 287, this is the 100-week EMA. 100-week MA, sorry. And can you see what has happened? Upon Thursday close and Friday pre-market, the market has already corrected all the way down to near the 100-week MA. So I thought to myself, it is Friday. After such a huge move, it is unlikely to correct further. Now, how much has it corrected so far? From the close of Friday to till the open of Friday. Can you see? So far, the market has corrected 15%. Oh, sorry, 13.42%. Look at the info box at the top right corner over here. So it is like, it has corrected 13.5% over a week, straight plunge. And then this is our closest support, and the next support is 280. How likely is it going to break through this support and go down all the way to test at 280? It's quite unlikely. And then furthermore, this is Friday. After such a huge plunge down, I was thinking most people would likely to be covering their short positions and taking profit, right? So again, there should be somewhat of a rally this time. And therefore, initially I was intending to carry on with my protective puts as it break the 200-day moving average on Friday. But after seeing that the market dropped down all the way to near the 287 level, which is the 100-week MA, I changed my decision. I'm not going to go for puts anymore. Again, I'm going to go for uh, a rally, at least a brief one. But and as I've said, this is Friday, so I do not want to hold any trade overnight. Given this situation, anything can happen. Next week when we open, it could have gapped down all the way to 280 for all you know, or it could have gapped up all the way to 302. So I do not want to hold any position. And what I can do in situations like this is to utilize my next day trade. So I have 2 day trades remaining, and once I used one, I cannot use the last one. If I used up the last one, I will be barred from trading for at least, I think, 90 over days if I don't recall wrongly. We have some questions over here. Do I look at volume when entering and exiting trade? Well, volume plays a part to some people. I know about that, but personally for me, I do not base so much on volume, but I base more on uh, other indicators, which I'm going to show for my trades on Friday. This plays a very huge role in my trade on Friday. And then, yeah, so what a move in trader life. Thanks. So I hope that by sharing all this with you, you will be able to pick up the lessons that I've learned and how I analyze. And next time, if you decide to trade for yourself, you can apply these strategies to benefit your portfolio. Okay, so Friday, let's jump into Friday, the minute candle. Now, this time I'm going to employ my indicators. So this is how I trade on Friday. Okay, I know things are quite complicated around here. Now, the purple line and the thick red dotted line that you see at the upper and upper and lower boundary, this is the VWAP. So VWAP stands for the volume weighted average price. If I don't recall the term wrongly, so basically it tells you the so-called the average of the how should I put it? Mm, So the purple line is the midline, and then this is the upper boundary and the lower boundary, the two standard deviation based on the historical price range volatility. So next, I looked at the RSI, which tells me the oversold and overbought conditions, the MACD, and the stochastic full. So these 3 indicators are what I base my trade on. And on Friday, this is what happened. I was intending This is the 287, the 100-week moving average that you see here. And straight away, the market, you can see pre-market bounced off. What does this tell me? 287 is indeed acting as a very strong support here. It should be a valid support. And then once market open, it shot up very strongly initially. And then when it corrected down to bounce off the 100-minute moving average, the 100 MA, let's just call it the 100 MA, I entered my first call, 293 call. 293 is at this level over here, 293. Just slightly above the peak of this candle. So I bought a 293 call, but turns out that I was wrong. And the market continued back down, reverses back down to hit the lower boundary of the VWAP. Now, at this point in time, I was looking very closely at all the other indicators. So I have to make a decision, whether to cut my loss or to average down my trade. Now, as I was looking at the different indicators, let me just zoom them up a little bit for you. Okay. Now, what I see is that at this period in time, all 3 indicators are all in the oversold territory. And from MACD, I'm seeing that the slope is decreasing. It is from a downtrend to slowly uptrend, recovering. So a crossover is going to happen very soon. And therefore, with all three conditions together with the VWAP, that's all 4 conditions being oversold, and the MACD showing a crossover soon, I decided to average down my trade. So I purchased another position size of 293 calls, which is the same strike price at around here, and I waited for it. So I bought the second time at around here, this low over here, and I was wrong for a few more minutes before the rebound happened. and then I waited patiently, and I see that the 287 is being tested again, so acting rather well as a support. Now, as prices come to this point over here, I started to draw patterns on the chart. So what I'm seeing is this: 3 consecutive lows. I managed to draw a uptrending trend line at this point in time. Now next, as this progress, I see that the chart comes down to test the 4th time round. So this tells me that the uptrend should be rather strong. It has been tested, yes, respected this uptrending trend line for quite some time now. And then with these 2 highs, I managed to draw another trend line like this. And can you see a channel? Can you see that this uptrending wave is bouncing in between this channel right now? And if we just extend it all the way to the right, So I once again hope that you realize the importance of technical analysis in trading. As a trader, you cannot forgo these skills. All right, so let me resize the like that. Yeah. So to the trade, I was slightly in the profit at around this range. I broke even at around this range, and I just held on. And again, can you see